Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, Tuesday morning, and we've got positive cues from Wall Street again, second day in a row, and I think that's good news, bodes well as we start our own session. Yesterday was a decent session as well. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, hi, good morning.
Hi, good morning. There's some red, there's some green. I wonder what's it going to be, but I think we're giving you both the options today between Mangalam and myself.
You know, I'll tell you what, in sport, they say you celebrate small wins, as against looking at the larger target here, right? We're celebrating small wins. The good part is yesterday we managed to close above that 22,500 mark. The FIs, yes, they sold in the cash market, but DIs bought a lot more. So we had net inflows coming in. And all said and done, crude is contained. All the other macros are contained. So small wins.
Small wins.
I'll tell you, expectations low. The last 5 months have sufficiently lowered those expectations, I think.
I'll tell you small wins. You said in sports, celebrate small wins. I think in life also celebrate small wins. I'll tell you a small win I had this morning. I boiled eggs without breaking them.
Oh, wow.
Brilliant. Excellent. On that optimistic note.
I played 3.5 hours of paddle yesterday
nice.
without breaking anything else. So, small wins, small wins.
All right, well, let's just take it from the start then in terms of what you need to know as we begin another session. And as I said, second day in a row, you had the U.S. markets, which were higher. S&P was up about 0.65%. It's the first two-day gain for the S&P since February, and that's saying something, right? I mean, and this is the question we put out yesterday as well, that is the U.S. market correction ended. From the high to the low, it was about 10%. Typically, 10% is a turnaround point. The dips get bought. This time, though, like every time, I mean, every time is new, but it's also the same in some ways. And there is a lot of uncertainty into that April 2nd reciprocal tariff event. But anyway, Nasdaq was up about 0.3% as well. But the mega cap tech pack ended lower. So you look at Tesla, which was down 5%, Nvidia, which was down 2%, Amazon, which was down about 1% as well. So, what did well? The China ADRs did very well. You had a bunch of telecom stuff which did okay. Consumer names did well. But mega cap tech essentially is what has led the U.S. markets higher. And of course, I mean, it's led to this, I don't know about U.S. exceptionalism, but stock market exceptionalism for sure. 10-year yield down 2 basis points, nothing. I mean, dollar index was down about 0.25% as well. I mean, I think that's more meaningful. 103.46 on the dollar index. Again, from the year-to-date highs, the dollar has slipped almost about between 5 and 6%. U.S. February retail sales print was mixed. The control group was better, but largely mixed. The prior number was revised a little lower. And I think it kind of tells you that this, economic momentum, there is a bit of a loss in economic momentum as well. High-frequency data seems to indicate that. Two things to watch out today. The Trump-Putin phone call on Ukraine-Russia war is today. And expectations built up quite massively about 2 or 3 weeks back that a resolution around the Munich Security Conference time, that a resolution, some kind of ceasefire is around the corner. But, well, that those hopes faded. There's a phone call today, and Trump has promised that he'll have something for his audience and all of us a little later. So hopefully maybe a ceasefire. And of course, the German parliament will vote on the fiscal package which has been proposed. And that typically happens towards the end of the European session. So we'll see what happens. I mean, it'll be after our session for sure. And that's a big one. Europe has started to, do well. And many are wondering whether other EU countries will follow the lead. France and other countries as well. How much they're able to, because it's a pretty dramatic shift with Germany is embarking on. So I think it's important in that sense. And of course, from an equity perspective, I mean, it throws up more opportunities, more options in the world for global investors. All right, let's just tie in the levels here. Nifty, of course, tested the 20-day moving average yesterday, but could not close above it. The number is 22,561. we're about 50 points, 52 points away from that number. So, that's the first level on the upside. And then 22,676, which is the high, the recent high, needs to be taken out for the market to do better. The supports remain the same, which I put out yesterday as well. Some more distance after yesterday's 0.5% move, 22,315 on the downside, 200 clean points away. And then below that, you've got the 22,236, which is the retracement, 61.8% retracement of the 700-point rally that we had from the lows. For the Nifty Bank, the resistance comes in at 48,520 and then 48,839, which is the daily swing, high, 48,839. And support, of course, now is 47,700, which, of course, is the low that the Nifty Bank saw last week. GIFT Nifty will give you a sense of how we're likely to start. 160 points. Is that momentum going to start to come back a little bit? I'm not so sure that momentum is coming back now, but I think, as we've been saying, the signals are there that the texture of the market is changing. It's not selling the rallies. Maybe at the margin, it is trying to buy the dips wherever they may emerge. Just one thing, broader markets yesterday did see advanced declines skewed towards what was down, not up, although volumes were with stocks which were higher. And I think that is also at the margin indicating that even though it's not all clear, but things are perhaps improving there as well. So more volumes on what was up, many more stocks down, but with little volume. I mean, that's not a bad sign at all. Surabhi.
Oh, absolutely. Things have been improving over the last couple of trading sessions, yesterday included. And today, the reason why the implied open is showing you such a bright shade of green is because Asian markets are rallying across the board. There's a nice, upward lift across the region, whether it's the Japanese markets, Chinese markets, Korea, everything is up and about. By the way, in China, talk about Chinese tech. BYD shares have been quite the headline makers this morning. That stock's been surging 5-6% because BYD claims it's got such a supercharged EV technology, EV charging technology, that your car can be charged in almost the same time as it would take to fill a full tank of petrol or gasoline. So that's been the talk of town, at least in the Asian market region, doing very, very well. It's also a week of central bank action, so we'll talk about the Fed, obviously. That meeting kicks off later tonight. There's also Bank of Japan. They have a two-day meeting. It's kicking off today. Tomorrow we'll have the BOJ announcements. There's also Bank of England, and that comes in on Thursday. So major central bank action week. And all these central banks, by the way, are expected to remain on hold. Even the BOJ, which later in this year is expected to hike because the Japanese economy is doing well, is expected to not do anything, not this week at least. So that's on the central banks. On retail sales, the US number, why did the market not sell off? The number was still very soft. The number was 0.2% versus estimates of 0.6%. However, X of autos, the number was in line with estimates. The growth was about 0.3%. But of course, there was that downward revision in the Jan number. Anyway, for what it's worth, it didn't really shock the system, so to speak. So the market continued to cruise along. There are downward revisions from the OECD, by the way, in terms of global growth forecast, US growth forecast. So just to leave that data on the table for you. OECD has cut the global growth forecast for 2025 from 3.3 to 3.1%. So, and it's all because of tariffs. They're saying that in their commentary. For the US itself, the estimate for this calendar year, 2025, has been lowered from 2.4% to 2.1%. And for the next year, 2026, the US is expected to grow only 1.6%, but they're still talking growth. Remember, the bigger issues are about stagflation and maybe even a recession. But those are the OECD latest numbers. Now, yesterday, the only glitch for our market was the return of FPI selling. Remember, we've been, discussing the let-up in FPI selling for the better part of last week. But yesterday was pretty big. Maybe it had something to do with the fact that a lot of these shareholder lock-in periods were ending. So perhaps there was, a bit of a skew in the data because of that. But for what it's worth, you can't ignore it. 4,500 crores of near about selling coming back on the system. It was offset very nicely by DII buying, 6,000 crores of DII buying. Now, the Nifty, if it remains on that cautiously optimistic path, it could perhaps head to the upper end of the current trading range. We've been in this range for a good 6-7 trading sessions. The higher end is around 22,650 to roughly 22,700. And maybe that would be the first aim that the market will take. Lots of stocks in focus. I'll just leave some names for you. Obviously, Bajaj Finserv and Finance will be watched very, very carefully. It's finally happened because Bajaj Finserv, along with a couple of other promoter group entities, they have bought out Allianz's stake in the life insurance and the health insurance joint ventures, and spending a big amount of money, almost 24,200 crores in that transaction, and we'll talk about it. Indices Bank. Now, Moody's has placed the baseline credit assessment on review for downgrade. The rating is the same. That's not the problem, but it's this baseline credit assessment because of what's happened in the derivatives portfolio. We'll see if the stock reacts or whether it's already done that reaction in the 27% fall that the stock has already seen. And finally, Remember, we keep telling you that the sign of promoters buying their own stock in the market is usually taken as a positive. Well, yesterday we noted that in Suryodaya Small Finance Bank, the promoter group has increased its holding from 22.3 to 22.4%. So another stock I'll keep on the radar because of that positive indication. But overall, as you're saying, happy to take the small wins, Mangalam, this morning.
Happy to take the small wins entirely. And the biggest win of that was the Nifty closing above that 22,500 mark. Why is that important? Largely because it's the first time in the month of March that has happened itself. So let's tell you a little more about the way trade is set up as well. So the Nifty closed above that 22,500 mark. But more importantly, the GIFT Nifty is indicating a very strong start above the zone from where we've seen a lot of supply emanating as well. So if you look at a bunch of highs on the Nifty over the last few trading sessions, you'd notice that yesterday's high on the Nifty, 22,577, exactly coincides with the March 12 high as well. And now after consolidating a little bit, the market's finally opening at a much higher level. So those are a couple of things that we'll most definitely keep an eye out on. The most important thing for bulls is that dollar index is contained at around 103.5. We've seen crude prices contained at around $71 per barrel as well. Wall Street indices, while they gained about 0.3 to 0.8% yesterday, Intel is up close to around 7% higher post after hours. So that's good for Nasdaq today as well. And oil prices are contained. What we need to do, however, is stay above the 20-day moving average. At the open, the Nifty conquers that, stays above that. But does that happen to the Nifty Bank as well or not is the big question. The FIs, yes, they sold about 4,500 crore in the cash market, but that was not only offset by DII buying, that was also offset by FI's own buying. They bought about 1,900 crores in index futures and they bought about 3,300 crores in stock futures as well. So all these factors doing well. In fact, in index futures, after a very long time, we saw FIs add 2,500 long contracts and cover about 10,000 short contracts as well. And if you notice, over the last 3 trading sessions, the FI longs have inched slightly higher from 18% to 19% and now 20%. Talk about small wins for the bulls itself. If you look at the options that are active, 22,500. The Nifty conquered that and the put writers have become active here. On the way up, the 22,700 call writers are playing for a premium of 44 rupees. The GIFT Nifty indicating a start around the 22,750 mark will be the first test of the open itself. And were we to sustain that, there is a fair amount of punt buying at the 22,850 call as well. So short point, option writers are positioned for a range of 22,400 to 22,750 on the Nifty. But were we to break out, then there have been some, punt buying at the 22,850 call itself. So maybe they are playing for that, 30, 40 rupees sort of pop after a 15 rupee premium on that 22,850 call itself. We've been talking about financials, how they will be in focus, but I'm looking at some of these large private sector banks which are non-HDFC. Yes, HDFC has been doing well, but what's doing better is ICICI Bank, Axis Bank, and surreptitiously, we've seen a lot of capital move to, names like Kotak Mahindra Bank as well. So can these sustain their outperformance or not is something that we'll most definitely track this morning.
Okay, all right, Mangalam, got that. So lots of cues to watch, largely looking constructive, can we say that for sure. Well, let's start off with the equity call of the morning. Mahesh Nadurkar of Jefferies says, the Jefferies economic indicator for February 2025 shows that activity levels grew at 6%, similar to the trends of the past 4 months. He says steel and cement volume growth at 10% for the past 3 to 4 months and recent uptick in electricity consumption are key positives. He adds that consumption indicators are uneven with auto sales GST data patchy. He says RBI's consistent liquidity injections, CPI at 7-month lows and FX reserves at 4-month highs provide some macro comfort.
All right, well, some macro view now. This is Upasana Chachra of Morgan Stanley who says that lower trailing inflation driven by decelerating food prices opens up room for additional easing. She expects CPI inflation to average 4% in FY26, which implies cumulative easing of 75 basis points. She says the key trends to track are food prices and growth, especially credit growth.